And we're live. Hey, back for another session at the World Crypto Economic Forum. I'm excited to welcome Elena Garidis. She is the CFO and co-founder of Defy Trends, and she could talk a little bit more about that. But she's going to do a presentation on leveraging analytics during this crypto bear market. So welcome, and the floor is yours.
Thank you, June. Hi, everybody. Yes, as June just introduced me, my name is Elena Garidis, and I am the CFO and co-founder of Defy Trends. Let me just make sure everybody can see my screen. Perfect. Wonderful. So before we get into leveraging data analytics to navigate the crypto bear market, I just want to give you a brief overview of what Defy Trends does and why I'm here to talk to you about analytics. So at Defy Trends, we are a simplified way, a platform, so to say, to make data-backed investment decisions for crypto. So you can think about it as a simplified Bloomberg terminal. Okay. All right. Thanks for bearing with me. So our mission at Defy Trends is to bring the data to the people and make it digestible and basically create a platform where the everyday user, even if you're not a data scientist or a financial analyst by trade, you can go in and understand what is happening in the markets, which coins are trending and why, which coins are overvalued and undervalued without having to spend hours on studying each indicator. Today, I want to tell you a little bit about indicators that are particularly well suited to find long-term investments, especially in bear markets. So just to have a little bit of an overview, there's multiple strategies that someone can basically use in a bear market. So one of them, very simply said, is long-term investment, and the other one is trading. When we look at long-term investment, we really want to find winners, and we want to look at their fundamentals as well as checking out whether the risk is appropriately priced in currently, or if it's underpriced or overpriced due to the broader market sentiment. We're going to look at diversification, and specifically I'm going to talk today about risk analysis, since we don't have time to talk about everything. You can also trade in bear markets. There are often a lot of movements that swing traders take advantage of, especially when looking at mean and trend reversion and using technical analysis. I'm not going to go too deep into this today because it is a little bit riskier, and we're looking at more risk-averse strategies today. But any strategy that you choose, keep in mind to always calculate your risk and to size your bets. So let's start really broad. I'm sure that most people are familiar with dominance, specifically Bitcoin dominance, and it's been talked about a lot, so I'm not going to spend a lot of time, but I just want to highlight how you can actually use this to see what trend the market is currently going in. Here you can see, for example, that the orange line is increasing, which means that Bitcoin dominance is increasing. That's not bad inherently. However, at the same time, the price for Bitcoin is decreasing, although I just saw earlier that it broke the 30,000 barrier again. So that's a good short-term sign. But what that means essentially is that altcoins in general are weakening, and that we're seeing the market still struggling, which I think is pretty apparent to most people focusing on the market today. So these are some indicators that you can use in your fundamental analysis for long-term investing. You can look at, first of all, the activity on a protocol, especially when looking at layer 1s or certain layer 2s, address growth, participating addresses, also hodling metrics, basically understanding how long have people been hodling. Are long-term holders giving up their positions and selling out? That's a bad sign. Of course, or are they accumulating more and more. And right now in Bitcoin, for example, we're seeing increased accumulation, which is usually a sign of trend reversion. I see in the interest of time, we're just going to dive right in. The first thing is also probably pretty well known is the 200-week moving average. So this is a pretty great chart. The pink line shows the 200-week moving average, and the dotted line is the price of Bitcoin. And you can see it's color-coded based on essentially how close the price is to the moving average. Historically, and you can see this on this chart, each time the price has touched the moving average, that indicates a bottom. So red means sell essentially, and blue means buy. And the disclaimer I forgot to say at the bottom, none of this is investment advice, and please do your own research. But this is a really great tool to find entry points for your investments. Of course, you can also use DCA or dollar cost averaging, which means buying into the market in intervals at different time periods during the purple or blue dots that are on this graph right now. All right, this is one of our charts. Let's look at the hype to trading ratio. Actually, you can overlay different analytics on one chart. So here I've overlaid trading volume from on-chain data with social sentiment and social volume. So here you can essentially see that sometimes social volume is really high, but trading volume is really low. For example, around March 29. That means that people who are talking about a certain coin might not necessarily purchase it. And generally, sentiment is more useful in times of high retail participation. And what we're seeing in this bear market and in most previous bear markets right now, but especially in this one, is that retail participation has dropped significantly, and investor sentiment, institutional investor participation has increased. So essentially, what's important to take away from this is don't rely too much on social sentiment in this particular market. So I have two more indicators that I want to show you. One of them is open interest. Open interest basically means trades that have been submitted but have not been executed yet. Often also funding rates for derivatives such as futures are looked at the same time with open interest and volume. So there's a nifty little chart right there that shows the relationship between volume, open interest, and price, and what that means in terms of the direction of the market. If open interest and price open interest and volume are both slowing down, that means that the current trend is weak and might reverse. And this is another great tool to time your investments. And I'm going to talk last but not least about total value locked, and use that a little bit as a segue to talk about staking and DeFi in general, as this can be a great way to diversify your portfolio from investments to less riskier allocations that are closely mirrored to fixed income products in the traditional markets. What's super important here is to always calculate your risk. So you'll often see high APYs that are not anywhere to be found in central finance or traditional finance that seem really appealing, but that's often because they're offsetting a risk. There's a few different risks to take into account when calculating what's called the hurdle risk. So the hurdle risk is when you add up all the different risks in a percentage way, and the return that you're getting must be above that for the investment to be worth it. You can look at counterparty risk, where you can essentially evaluate if the platform has had any hacks or attacks in the past. You can look at slashing risk, which means if your node goes down or the node that you're participating in, how much will you be penalized for it? You can look at currency risk, which also includes impermanent loss. And that is a pretty big one. So when your asset is staked, what is the risk that the value of the asset will go down? And also, the great thing about DeFi and being on the blockchain is that you're able to really monitor all the transactions. So you can see if a protocol, how much they have deposited versus how much they've lended out, what those loans are, what the collateralization are, and basically get an idea of what is the risk there that the protocol itself is taking on. So you're taking all of those risks and you add them to the risk-free rate, which is usually the risk-free rate of the asset that the crypto coin is pegged to. So if you're looking at a stable coin that's pegged to the USD, you would take the USD stable risk-free rate, and that will get you your hurdle rate. And the reason I went into so much detail with this is because in bear markets, it's especially important to do your research and make sure that you know the amount of risk that you're taking so that you can size your investments and make sure that you're protected and you're taking as much risk as you can take. So this is my time, and I hope that just brief overview of these indicators have given you an idea of where to look and where to do more research if you want to. You can also always reach out to me or sign up at defytrends.io if you want to learn more. And thank you so much for listening. And yes, hi June.
How's it going? Hey, thanks for the talk. Really informative. A variety of different, I guess, tools to use and so really appreciate it. So yeah, and feel free to stay if there's people you want to answer questions. I don't know if there were any questions, but feel free to just leave your contact information. And yeah, thank you so much. And we'll see you out in the crypto world.